Welcome to another episode of the Eddie Donan Show. I'm here with Matthew Finklestein, my partner and co-host.
Hey guys.
How are you doing, man?
I'm great. How you doing?
Pretty good, pretty good.
Awesome.
Been a while. I'm happy to be back.
Yeah, excited to do it. Let's do this. I'm excited.
Yeah. So today what we're going to talk about is we have a lot of questions that come through my content in social media, a lot of emails, a lot of common questions our clients reach out for. Mm-hmm. And the whole purpose of this podcast is to answer those questions and to provide a lot of value and kind of a behind the scenes look at what we do as real estate agents and get you real answers. So without much into it, just get started.
Yeah. First question. It's kind of almost like a very general question, just given all the changes that's going on in the market right now, with interest rates being really high, is it still a good time to pick up an investment property?
You know, it really depends, right? I'm always biased because I'm an investor myself, and I obviously do this for a living. So I'm a realtor. So whatever I tell you guys, you might, not think of it as being as a completely honest opinion, but it is. I certainly believe that real estate investment is the way to go, because if we look at what's going to continue to happen in the Greater Toronto area and Ontario in general, there's still going to be appreciation happening year over year. And if you'd have asked the same question 20 years ago or 10 years ago, it was history has proven that pricing will continue to go up. So I believe it is a good time, but it's not for everyone. Whenever somebody's thinking of investing into real estate, they really have to take the pros and the cons, and they have to look at it in a specific scenario. And that's what we talk about with clients all the time.
Absolutely.
Right?
Because it's specific to them as an individual.
Correct.
What's their financial situation? Do they need cash flow? Are they looking long term? So, and then with interest rates, they're always going up and down.
100%. You know what? You can't really, and we were talking about this in the office earlier on, and we can't really base our decision to enter the market or not on interest rates because they're fluctuating.
It's always fluctuating. And then it comes down to timing.
Correct.
Are you trying to time the market?
Correct.
And, what's the opposite of that? Instead of timing the market, it's time in the market.
That's right.
I mean, that's something you told me about years ago.
But it's true, right?
It's true.
I think the people that lose in real estate, because you hear it all the time, they bought high and they couldn't exit them. They try to do it in the short term. So if you're flipping a house, if you're asking me, is it the right time for me to flip a house? I don't know. Maybe not, right? Because we don't know in the short term, we don't know where it's going to go immediately. But in the long term, I mean, I'm willing to bet that it's going to keep on going as high as it's been appreciated for the last 10 years, right? And it's basic supply and demand. There's different numbers being quoted out there, but apparently we need about 100,000 units entering the market being built every single year or more, but we only can supply about 20 to 30,000 units. So we're going to be in a deficit for the next few years. Right. More people are coming in. There's a deficit growing every single year. So pricing will logically continue to go up. So as an investor that's looking at a long-term plan, then, how can you not like buying something for X dollars and then it being worth 2X in 10 years?
All right. So I come to you, I'm thinking about investing. Eddie, what's the best investment out there?
Again, very specific in situations, right? The most common investment, if you're a brand new investor, the most common thing that you're going to do is pick up another single family home or condo and rent it out, right? So what does that look like today? You come in, you have some down payment saved up, and you buy a small bungalow or a condominium and you rent it out, right? And that's probably the most common investment to start off. That's where people should be starting off. I have a lot of clients that sit down with me and they only own one house, but they want to buy a 10-unit apartment building. It doesn't work that way.
You can't scale
right? You got to start small. So that's the most common investment that's happening right now. Now, the advantages of it is you pick up the property, you close on it right away, you start collecting rent, it starts appreciating right away, and your tenant is paying down the mortgage for you. So you're building equity. You're recapturing the principal and it's going up, so you're building equity, right? There's some people that are not ready to be landlords right now, or they can't qualify for financing right away. They don't have the entire down payment, the whole 20% that you need to invest in as buy a rental property. So there's options in the pre-construction world, and that's very, very popular because I have a lot of clients that want to have a more passive approach to investing. They want to buy, they want to enter into the market, they want to give their deposit and wait 4, 5, 6 years for a place to be built, and then focus on closing and becoming a landlord at that point. So pre-construction is a good option for those people. And I think that's where most investors, not everyone, but most investors would start with that.
All right. So speaking of pre-construction, I got a specific question for that. Okay. There's a large gap between the resale cost and pre-construction. So what makes pre-construction a good option, given that you can buy a comparable unit and resell at a much lower price?
Yeah, that's a very good question. So again, whenever you're investing, you really want to look at your specific goals. And I'm going to be blunt in here, and if a developer is hearing this, then they might not like it. But if you're in a position to close right away, you have the 20% down, you're qualifying for a mortgage, you don't care that the rate's a little bit higher than it was 2 years ago, then why not buy a resale product? It is going to be cheaper. You are getting more bang for your buck. That's true. But if you're somebody who doesn't really want to close right now, who wants to just give a small deposit this year, maybe another small deposit next year, secure a unit and then enter the market that way, giving yourself the benefit of time, then pre-construction is the way to go. It's also funny because it's almost like comparing a brand new car with a used car, right? The cost of building these units right now, it's much higher than it was 10 years ago.
Right.
And then the builders have to charge that. It's honestly basic supply and demand. So the pricing of pre-construction won't come down anytime soon because builders just can't afford to build at a comparable rate for resale.
Right. So when you're looking at a pre-construction, how do you select one? How do you select a pre-construction project?
Well, very simple, very generally speaking, right? First of all, you want to look at the location. I'm assuming we're talking mostly about condos because when people think pre-constructions, they're talking about condos, right? So first of all, you want to look at the location. And the location, you want to be close to transportation. You want to be close to amenities. You want to be close to parks, schools. You want to pretty much have everything within walking distance or at least a quick bus ride there. Why? But secondly, regarding location, is that it has to make sense. There's just some condos being built in places that condos are not needed. So it doesn't make a lot of sense. So first of all, location, two factors. Does it make sense in investment? Is it going to continue to go up? Is there going to be a demand for it? And most importantly, is it well situated? So after I look at the location, then I look at the reputation of the developer. This is key, right? Because right now, in this time, and even before, you hear of projects that are being launched, but they never get built. So somebody comes in, they give their deposits.
So what does that mean? They get launched, people buy some,
Correct.
It doesn't. What does that mean?
Yeah, so it can be, the most common factor is it gets launched, there's not enough sales, people don't buy them, or the developer didn't take the real cost into consideration, and they have to raise the prices, they don't get funding. So many things can happen. It's usually due in lack of experience from the developer, and then they'll cancel the project. And then the buyers will get their deposit back because the deposits are usually held in trust by the developer's lawyers. It's not like they're losing the money, but they've lost time because it can get canceled 2 years from when you buy.
So how do we avoid that?
You find a reputable developer.
There it is.
That's the main thing, is finding a reputable developer, somebody who's done this before, somebody who you can actually go and see, like, hey, I'm in this building right now that this guy built. You can see the finishes. You can see that they deliver on what they promised. And to me, that's key. Another thing that's very important to keep in mind is don't always go for the cheapest thing available, because that's when these projects get scrapped. If you're looking at somebody selling X building at $1,500 a square foot, and then right next door, you see another developer selling it at $1,200 a square foot, you have to think that there's something there. Why that big gap? Now, logically, as consumers, we think, oh, we're getting such a good deal. But that's when projects get scrapped. Maybe this developer hasn't taken into consideration all the expenses, and then later they're going to be canceling the project. So you have to be very, very careful with that. So reputation is the key way to go. Third thing that I really look at are the incentives. What's being offered to me as a buyer, right? Because this is key. You want to have certain incentives, certain things that protect you as a purchaser, because eventually you're going to close in this 4 or 5 years down the line. So when you close, you don't want to be hit with unprecedented expenses that you were not aware of, and then that's adding on to your closing costs. And actually, most importantly, I should have said this before, I want to see when I'm buying the unit. Access. Okay, and let me explain to you what this means, right? When you're buying a pre-construction project, you really, 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 as an investor, want to be the first person in line.
Yes.
Because there's tiers, and you know this very well because you do this. There's tiers of releases, right? The first time a project's coming out, it's going to be advertised to developers, not advertised, it's going to be released to developers, friends, and family, workers, employees of the company. They're going to have an opportunity to buy the units. These are not even being released yet. They're not being advertised. Then after that, it's going to be released to the platinum agents. These are agents that have had relationships with these developers that have sold units in previous buildings before, and they're going to get allocations. They're going to get a chance to sell the unit to their clients. This is really where you want to get in, because every tier of release, the price is usually going up.
Right.
So you want to get first access in it. It's very, very important as an investor, because that guarantees that you're, number one, getting the lowest price, and number two, it's going to be the longest time from when you buy to occupancy, which gives that forced appreciation to happen, which is what you want it to happen.
Perfect. So next question is, it's a first-time investor. I'm really interested in picking up my first investment property. However, I'm hearing horror stories about tenants not paying and being able to evict them. How do I protect myself?
Yeah, I mean, this is a key thing. This is a key thing that's happening right now. You know, I'm not going to, we're not going to sit in here and blame people.
Yeah.
There's a fundamental problem that's happening right now within the landlord-tenant board. And pretty much there's a backlog dating back from COVID. And this happened in supply chain and everything like that. So this is not only specific to the tenancies, but we're talking about that right now. So there's a backlog of cases. The system is overwhelmed. Some people say the system is broken. I don't know if I agree with that specifically, but I think that there's not enough people looking at the cases, and they're taking very, very long. So you see the wait time today for somebody filing for an eviction or non-payment of rent, it can be anywhere from 8 months to a year to get a hearing.
Right.
Well, before COVID, it would be a couple of months. So your risk as an investor has grown, because before you were looking at, if you do things correctly, you can potentially evict a tenant that's not paying, a delinquent tenant. You can potentially evict them in a matter of 4 months to 6 months tops if you're doing things correctly, even quicker than that. But now you're looking at a year time. So that's a year that you're not receiving any sort of rent. So first thing I'll tell you, it's that if you're diligent and if you do a good job in selecting your tenants, the risk is very minimum. The majority of tenants and the majority of landlords, they live in a happy relationship.
Yes.
Yeah, I'm not trying to be,
And there's the stories out there.
Correct.
But those stories are a huge minimum.
Correct.
Like, it's very low.
Correct.
The amount of times these problems come up.
Correct.
And it's all about doing your due diligence at the beginning.
Correct.
At the front end. I mean, you yourself have not had a tenant for a month or so because you're looking for a better quality tenant.
100%.
So you want to make sure you find that right tenant.
100%. That's the best way to go about it, is really being diligent with your screening process. And a lot of the times when I hear these stories about, well, this and this happened with my property, it's things that, I might not say them out loud, but, you should have seen it coming.
Yeah.
Right? Like, you should have had a better process in place in order for you to screen the tenant and avoid this potential conflict. Another thing too is that, like everything in life, your relationship as an investor with your tenant, it's exactly that. It's a relationship, right? So just because the tenant's good, maybe your property might not be a good fit for them. These are things I consider with my properties, right? It's not only having a wonderful tenant. It's like, well, will they be happy in the property? Because if they're not happy, then it's likely to cause me a headache as an investor.
Right.
And then conflict. I want to avoid that, right? So whenever I'm picking a tenant, I'm not only picking on their qualifications as if they're going to pay the rent. Are they going to treat the property well? I'm seeing is it going to be a right fit that we're going to be able to have an ongoing relationship for a long time and everyone's going to be happy. So I guess to answer the question without circling too much is, you have to screen your tenants and you have to be comfortable with it. It's a level of risk that you need to accept. Because even though you said, and you're correct, that the likelihood of it happening if you do your due diligence is low, when it does happen, it's horrible.
Yes.
And the losses can be severe.
Yes.
They can be, ruin your life, because you're not only losing money, you're dealing with this conflict that's unresolved, and it really feels like it's out of your hands. So you have to understand that there is that risk of it happening. It's the cost of doing business. And if you're not prepared to accept that as a risk, then maybe being a landlord's not for you. That's one of the things too, is like real estate investment. It's not for everyone. Like, you guys watch my content, I pitch it and it's great. Like, I feel it's the way to go. But it's not for everyone. I'm not here to convince somebody to become an investor. There's people who are happy investing in crypto, stocks, so many things, private equity, so many things that they can do. This is for people who want to invest in real estate, and that's one of the many risks that are associated with putting your money into a rental property.
Cool. So, next question. Is it still advisable to pull out equity to buy a second property?
Again, very specific. The rule of thumb is when you're pulling equity to buy a second home, like an investment property, is you want that investment property to, number one, pay itself. So the property that you're buying, the rental income is going to cover that particular mortgage. And you want that rental income to also cover your loan. So
Right.
let's say if you're taking $100,000 out of a line of credit and it's going to cost you $300 a month worth of interest only. So you want that rental property covered. Now, what's happening because of the interest rates and also the price of property, which is high,
Right.
sometimes they're in a negative cash flow situation and it's not going to happen. So you really have to look at your finances and are you able to afford that negative cash flow every month? And is it worth it? Is it a good
Right.
property? Is it going to appreciate the way it is? Is it going to get a good tenant? So there's many factors to it. Short answer is yes, I still think it's worth it for most people because they're using something that's just sitting there, which is equity in their houses, and they're using it to buy something else that's going to create even more wealth for them. So in the long term, I think it's worth it, but you really have to make sure that you can carry it in this period of time without getting into any trouble.
All right. So next question. We are fairly new to Canada. We brought money from our country and will be looking to buy a house. However, not sure if we will be able to afford it since the mortgage will be far more expensive than our rent. Should we wait for interest rates to come down to make it more affordable?
Okay, so the answer is no, because I believe
that's trying to time the market.
Time the market.
And that never works out well.
So what happens when rates go down, Matthew?
When rates go down?
Yeah.
Pricing goes up. Pricing goes up. Yeah.
You're like, what kind of so what's going to happen to this person if you're specifically waiting for rates to go down? The pricing of the house is going to skyrocket, literally skyrocket.
Yep.
Like I'll go on record here. The Greater Toronto area, this market, when it shoots back up, it's not going to be a slow progression. It's going to go from 0 to 100, and you know this. It happens all the time. It happened during COVID. It happened in 2017. Happened in 2022. It's from 0 to 100. So you're not going to be able to get into the market if you're waiting for rates to come down because when they do, it's going to go this. But another part of this question talks about affordability. Okay, whenever you're getting into a house or a condo from renting to ownership, generally speaking, unless you're putting down a huge amount of money, your cost is going to go up. Okay, in many cases, I have clients that are paying, let's say, $2,500 worth of rent, and it goes up to $4,500 when they own. And you have to be prepared for that. You really have to not wishful thinking that you can afford it. You have to really prove to yourself before you jump that you can actually afford it. And is it not going to compromise your lifestyle severely? I'm going to go out here and say there's nothing wrong with renting. If you can't afford to buy, rent. There's absolutely nothing wrong with it. You can build equity in other places. You don't have to be a homeowner in order for you to live the Canadian dream when you come here to Canada. You can rent, and there's nothing wrong with that. So I would say just be very careful that you can actually make those payments. Because remember, I was saying that people that lose in real estate, it's people who speculate, or people that get into the market, they jump from a $2,500 a month payment to a $4,500 a month payment. They can't cover the $2,000, and they got to sell in 6-7 months. And that's putting yourself in a situation.
And I talk with renters all the time.
Yeah.
And it's about telling them, yes, you're paying your rent, but every month, put more into savings.
Correct.
Practice your paying that mortgage. Because if you can spend that extra $1,000 or $2,000 every month, and you're putting that money away, one, you're showing you can do it, and two, you're saving money.
Correct.
So you have to show yourself that you can do it and maintain your lifestyle. It's not like all of a sudden you move into your house and a switch is going to go off and there's extra money coming from somewhere. No, you have to know yourself that you can do it. And yeah, if you don't have enough for that down payment, you can invest in other areas. You mentioned that earlier.
Yeah.
There's different types of investments. So you can rent, but put money away, save money. It doesn't have to be through a house. So there's different options. And that goes back to one of the first things you said is it's about sitting down with somebody and seeing their overall financial situation. What works best for them? Maybe, scenario A, maybe scenario B, or maybe right now it's not the right time. Yeah. We have to see what works best for you.
I got a lot of people, a lot of younger guys and girls that reach out to me through content like this, and they want to get into it. They're single. There's no partner right now.
You know the next question, right?
No. Okay. Well,
what advice would you give to an 18-year-old looking to become a real estate investor?
No, but this is different. This is like different. This you kind of go in there and know. So it's different. I get approached a lot, right? That they really want to buy a house. They want to buy a condo because people, any way you slice it, it's like housing's going up. And I mean, I'm sorry to sound repetitive, but it's going up and it's going to keep on going up. So why wouldn't you want to buy something cheap today? It's going to be worth a lot of money later. So people see the value in that. So everyone wants to become a homeowner, but let's say out of 10 people that reach out to me, probably only one is really ready to get into the market right now for their principal residence. because of that same thing I said. It's affordability. It's going to jump. Your mortgage is going to double what your cost of renting is. It's not affordable. You're not going to be able to live in it. So I say just be a little bit patient. And that's the main thing. You really have to be able to be honest with yourself. Because at the end of the day, the bank might be able to give you the mortgage. According to the bank, you will qualify. Your realtor will tell you, yeah, let's go buy right now, right? Your mortgage broker will say, go buy right now. Lawyers will say, go. But at the end of the day, you have to be, like you said, honest with yourself. And the best exercise is actually putting that money aside.
Exactly.
So if you know that now your house is going to cost $4,500 a month and you're paying $2,000, prove to yourself for 6 months.
Yep.
Put those extra $2,000 aside. See if you can still eat, go out, drive a car, right? Not time the gas prices. Just see if you can actually do it.
See if you can live. See if you can maintain your lifestyle.
That's the best thing. And most people don't do that.
No.
And it goes both ways as well for investors also. That's another topic because most people are worried about.
It's the same thing.
Yeah, about what happens if I can't rent my property for a month or two. And you touched on that. Like I keep some of my properties vacant until the right person comes along. But you have to have that backing there. You should be able to carry it in case something does go wrong.
All right. So now talk about that 18-year-old investor. What advice would you give to them?
Yeah. First of all, it's first advice I would say is get a solid income going. Okay. Like find a career, find a job, a business that can give you actually income to invest. Because you get a lot of courses right now that you can invest with zero down, or you can buy, for sale properties, or you can wholesale them. But in reality, what actually works is you need to have an income in order for you to, number one, to save for your down payment, and number two, for you to qualify for a mortgage. So number one, if you're 18, I'm assuming that you don't have that yet, get that in place. Get a job and start saving. Start saving a good portion of your income. If you're living at home, start saving 40, 50, 60% of your income towards a down payment. Secondly, assuming what kind of job you have, if it's a lower paying job because you're 18 to 22, I would start very small. I would get into the first real estate investment that I could afford. And that's more than likely not going to be in the Greater Toronto area.
No.
So I would look outside of the Greater Toronto area. I would look at cities like Windsor, like Sault Ste. Marie, Sudbury, North Bay, that you can get into the market, for $300,000, and it allows you to build equity much faster than you would saving dollar by dollar.
The key thing there is you might be living in the GTA right now.
Correct.
You buy a property up, out in Sault Ste. Marie. You're not moving there.
Correct.
It's just an investment.
100%.
You're looking to build equity. So people need to change that mindset. I don't want to be living out in Sault Ste. Marie. You're not. You're investing out there. That's where your money is going to be growing out there. So it gives you a chance. And in a couple of years, few years, now you can take that equity, that investment, buy something closer, or buy a second.
Correct.
And now you're building your equity.
And that's what this guy wants, to become an investor. So I think there's a difference between being a homeowner and living in your own house to being an investor. So if you want to become an investor, start investing as soon as you can. But if you're 18 and you're waiting, not to be like pessimist, but if you're waiting to save the amount of down payment required for you to buy a house or condo in Toronto or the GTA, you're going to be waiting for a long time. Man.
Long time. And instead, you could be watching your investment grow.
Correct. And, in a lot of cases, I'm seeing this is very popular. And that's why I've built a network of realtors that are like-minded, that help investors in those areas. Because we're seeing it a lot. There's a lot of parents that they want to buy something for their kids. And back then, it might have been a little bit easier for parents to buy a condo here in Toronto because it was more affordable, right? But now it's almost impossible, right? You're looking at $1,500 a square foot. It's very difficult for somebody that's not extremely wealthy to be able to just say, hey, I'm going to buy $1 million condo for my kids. So a lot of these people are investing outside of the GTA because it's still a good way to go. They're buying something for their kids that are going to want to grow for the next 15, 20 years. And once it's time for them to go to school, once it's time for them to start their own lives, they have something they can fall back on. As you said, they might not necessarily live out there, but they can at least sell it, make some money, and it's a good head start.
All right, now I'm going to put you on the spot.
Okay.
So you've said a couple of times.
My water first.
Yeah, you get your water. Get ready for this one. So you said a few times, pricing is going to go up. You said it over and over again. Recently, you said when was the best time to buy? It was 20 years ago. So you keep talking.
Some people didn't like that.
Pricing's going to go up. Pricing's going to go up.
Okay.
How do you know? How can you be so sure? So now you got to back it up.
I mean, if you look at the numbers here, over the last 100 years, the Toronto Real Estate Board's been keeping track. Pricing has actually literally doubled every 10 years. That's the average, right? And there's been some decades that it hasn't doubled. So for those watching, they're going to say, yeah. But on average, the trend is, over the last 100 years, pricing has doubled. right? And that has been through cycles of recessions, of ups and downs in the economy, ups and downs in the real estate market. The tendency is to do this. I believe in many aspects of life, and real estate is no different, that past performance is a very good indicator of future performance, right? Everyone, one way or another, believes this. And secondly, it's also what I spoke about earlier. There's clearly a supply problem. And you guys, anybody who listens and watches to real estate content, they hear this all the time, but it's true. There is a supply supply problem. We don't have enough houses or condos.
Your politicians talk about housing shortage all the time.
And we're bringing 500,000 people every single year. And then your kids are turning 18. They're going to need a house of their own too. So population is growing, but the housing is in a deficit. So that's going to push supply and demand. Supply is high, demand is high, supply is low, pricing is going to go up. So I think it's a pretty safe bet that in the long term, pricing will continue to go up. And that's one thing I want to clarify. Everything that I talk about, you guys never hear me pitching you to buy a condo to assign it in 3 years or for you to do a flip. No. There's many flippers that are my clients, but they're specialists at what they do. They know this better than I do. They know exactly how to make a house appreciate in value by renovating it, and they do a great job at it. That's different. My investment strategy for what I like to do for myself and what I think most people should be doing is a long-term approach. 10 years. I look at a property with a 10-year mark. So I know unless something happens in my situation or I have to get rid of it for whatever, because we don't have a crystal ball. But for me, when I buy something, it's for the 10-year goal. So I know in 10 years, for sure, the likelihood of me losing money is almost zero.
All right. Going to completely shift gears now.
Okay.
No more investment, nothing like that. What's it like becoming an agent? So completely different. For people who are thinking about becoming an agent, sure, they want to invest, all that. But now what's it like becoming an agent? What's it like first starting out? And I know what you're going to do right now. You're going to turn this on me. You're going to turn this on me because I've been an agent less time than you have.
That's right. So, so I think this year I'm going to be 16 years. So I started in 2007. I got licensed in 2007. So why don't you tell me, what's it like being an agent?
So, you've been in the industry for 10 years longer than I have. I knew this was coming. So
you shouldn't have read that then.
Shouldn't have read that. So, all right, we're done for today. Thanks, everybody. So it's a lot of it. You've got to be able to interact with people. You got to be able to talk with people. You can't be somebody who's just, shy in your shell. It doesn't work that way. You've got to get out there. You got to put yourself out there. We talk about this all the time. You have to get out of your comfort zone.
Yeah.
Here I am sitting doing a podcast. I never thought I'd be doing one of these, but out of my comfort zone.
Right.
And a lot of it is engaging with people, meeting people, and providing value to people and service to people. Not everyone is going to buy every time you talk to them. That's just the inevitability of it. So you've got to be comfortable with that.
Yeah.
And learning, you've got to be able to learn the industry and get more knowledgeable about the industry because people are coming to us as experts.
Yeah.
So, you go to your doctor, you go to your lawyer, you go to your accountant. Those are experts. You come to your realtor, they're the expert on what's going on. So, or
we should be at least.
We should be at least, most of us are. So, but for the most part, it's been a great learning process for me. I transitioned from one industry into another.
Yeah.
So
you were in the service industry. So it is a high correlation there for sure.
So that was good. I was able to transition those skills over. Hospitality industry is where I came from. So a lot of customer service skills, a lot of just being able to work with people, be patient with people, a lot of understanding. So it's been great at first.
Cool.
So, and then, partnering with you allowed me kind of to jumpstart a bit.
Yeah.
You've got a lot of, connections and leads and whatnot and experience. So I was able to learn that instead of learning as I go.
Yeah.
So when you started, you were in your 20s.
20 sharp.
Yeah. I don't think you were married. I'm pretty sure you didn't have any kids.
Nope.
So it's a little bit different than my situation.
100%.
Married with kids, don't have that time to kind of stumble and whatnot.
Yeah.
So it's your learning process.
Yeah.
So everyone else is different, but it is a great industry to be in. Yeah. And the one thing I always say about this industry is no matter what job you're in, this job provides us with one of the best experiences, best moments of people's lives.
Yeah.
There's been so many times where I have the honor and privilege of calling somebody, hey, Eddie, guess what? You got the house.
Yeah.
And I've had people screaming and crying on the phone and cheering. As I'm talking, it feels great.
It's very rewarding.
It's so 100%. Rewarding because in that moment, you fulfilled one of their dreams. you've helped them in that process.
Yeah.
So it's a great feeling.
Yeah. It's very rewarding to be a part of it. You do really become almost like family during that period you're working with them, whether it's a month finding them a house or 2 months or whatever it takes. You learn so much about people. And if you answer the question, great. Now I'm going to answer it myself. So first of all, I would say two things. I would say, number one, it's a marketing job first, it's a lead generation job first, and it is a sales job, right? So most people are not prepared for that because they see the content of social media, they see agents that are already established, and they don't really see what happens behind the scenes. And you know what I'm talking about right now, right? Being candid and honest. So, on camera, you might see one thing. You might see me showing houses. You might see a for sale sign, a sold sign, and you see attribute that I'm making money and that I'm being successful. But a lot of the times you don't really see what goes behind that. So I think that, you have to be prepared to have a plan in action for client acquisition. So marketing, sales, lead follow-up,
we don't
key.
do a lot of Instagrams of the hours of phone calls that we make. Yeah.
Correct. And that's what most
that's not exciting.
Nobody
content.
does that, right? So most agents are not prepared to deal with that. And when they come with their license, they get, hit with the reality. It's like, oh crap, now I got to find a client. I got to sell something, right? I got to help people. So first of all, you got to find people to help. That's the main thing. You have to be prepared to do that. Everyone that you're seeing on Instagram right now, that you're seeing on TikTok, and they have these nice cars and these nice houses, they've done a good job at promoting themselves and finding people to help out, and they have great skills to help those people out. So you have to have that. And secondly is you have to enjoy it, because at the end of the day, if you're not passionate about helping people, if you don't really care about them, it's going to show, and you're not going to perform well. You're not going to sell, or maybe people won't be able to tell because you're a master faker or manipulator, but it's going to suck for you. Right. And then you're going to hate doing your job. So I think that you really have to analyze it to see if it's something that you will enjoy. But I think it's a great career. It's a great business to be in. I think we still are going to be relevant and be able to provide value to buyers and sellers and investors for a very, very long time. So I do encourage everyone that's considering, just do your research like everything else. But it is a good career. It's a good business. Competitive, yes, but everything is.
Cool. Well, that's it for the questions.
Yeah. One thing that I wanted to point out is that when I started in real estate, I actually didn't want to sell real estate. So the way I think I told you the story, how I ended up getting into real estate is that I think it was like my 19th birthday or 20th birthday, and those seminars that I was talking about earlier, learn how to invest into real estate and create wealth without money down. I went to one of those. My mom took me to one of those. And then whatever the guy was saying up there, it sounded great. Like, I mean, it's great. It's easy money, become an investor, buy these properties, flip them, and buy more and more and more. So that's what I wanted to do. Like, I wanted to become an investor. And then I happened to meet a couple of real estate agents through my work. I was working in retail selling suits. So a couple of my clients were real estate agents, and they said, hey, you have a good personality. You would do great as an agent. So I figured, okay, I'm going to become a real estate agent, to make a little bit of money and help me invest. And that's really how I got started. And the funny thing is once I got into real estate, I got so focused in selling, the selling aspect of it, finding clients, helping families become homeowners and investors, that I actually forgot completely for many years about buying for myself, my initial goal. But my initial goal, that's why you find me, a lot of my content's geared towards buying real estate and creating wealth through it. It's because that's actually 17 years ago, 16 years ago, that's what I wanted to do. That's the main reason why I got into this. So that's what I figured would be a good story to share.
That's cool.
For it. So if we don't have any more questions.
No, we're all good.
So Matthew, thank you for pushing yourself out of your comfort zone again.
Yeah.
I'm going to be asking you the questions next time. So no, not going to happen. Okay, cool. Guys, thank you for watching. Thank you so much for your support, for supporting this show, for supporting my content. The best thing you can do for me is like, share, comment, and I'm always looking to answer your questions. So you can send me a DM, you can email me, whatever way you want to reach me, get in touch with me. And that gives me the right content to provide you value. So your questions are greatly appreciated. And until next time.
Thanks, guys.